Rob, great to have you on today, and thanks for sharing your insights on this historic move as well. Look, fair to say, it came a little sooner than you expected, Rob.
Yeah, well, I think a lot of us were the wrong side of this, although after the Nikkei flagged what looked like a done deal over the weekend, I think a lot of us were thinking, oh, it is going to happen after all, and of course it did in the end. So, I've been covering Japan on and off for about more than 30 years, and it's good to see it finally moving back into the realms of normality again.
Absolutely. And look, okay, Japan just becoming the last country to end negative rates. So the significance of this really cannot be overstated. It's scrapping YCC, also ending ETF purchases, which is something that Kari was just explaining. What will the BOJ do now with its massive ETF holdings? And could there be a market impact as a result if we saw some kind of adjustment being made here?
Yeah, it's an interesting question. I think one of the parallels might have been from someone like the HKMA back when they were doing their sort of policy support years and years ago. And of course, they made a huge profit out of this and then sold quite sort of dynamically into the market. Sold when the market was strong, didn't sell when the market was weak. So it didn't really have a big impact. But these sorts of gains that the BOJ potentially has made on its sort of equity holdings will have to offset the potentially very large losses it will be making on its bond holdings. So you've got to sort of take the rough with the smooth here.
Rob, if I could just ask you to look ahead a little bit, what will be some of the signs over the next couple of months, A, that this change is working, and B, that it's not working, and how will that impact, how will it, because that is going to impact what the BOJ does from here on, which is, I think, what everyone in the financial markets is focusing on.
Well, look, I think the BOJ has taken a bit of a punt today on the expectation that the very substantial increases in wage rates that we're seeing announced in a great number of firms, that is actually going to deliver household spending growth. And at the moment, they don't know that. We've got wage growth, and it looks great. Will it actually deliver growth, which will then drive demand-driven inflation and keep it there? Or will it not? Will this just be a sort of flash in the pan and things will drift back? That's the big gamble that the BOJ has taken today. If it pays off, then I think we can start to anticipate perhaps a little bit more. Perhaps we could see a further hike by the end of the year, or certainly start to think about hikes next year. If not, then this one's going to look a little bit awkward for them.
A punt and a little bit of a hedge too with there, because this is the Bank of Japan. I think part of the equation that they're trying to put in is for the average Japanese person to start moving their cash into riskier assets. And they have tried so many times in the past to do this with very mixed or limited results. Do you think finally this could be the trigger and that could be what pulls this economy along?
Look, it could be, but I think really what we really want to see is Japanese households actually spending their incomes and saving a little bit less. And if you think about it, if you start giving people a positive nominal return on their savings, that's not a particularly bad thing to do for a nation of savers, which is what Japan is. Elderly population, a lot of savers. Start giving them some income that they can rely on. They might well start to spend it. So it's the sort of exactly the opposite of what textbook economics would tell you would happen. But I think in Japan's case, it very well could work this way.
Rob, just before we let you go, Japan is a hot story right now. It will continue to be so, but there are other global central banks out there, and Australia has just held rates at 4.35%. What are the economic indicators that the RBA is going to be looking out for next to determine its policy settings moving forward?
Yeah, well, Michelle Bullock's been pretty clear that the one thing she's keeping her eye on above everything else is inflation, inflation, inflation. So we've got to see that making further progress. It has looked very good recently, but the base effects start to look a little bit less favourable over the coming months. I think she just wants to get over this the next couple of months, and then things should start to look good again. If we continue to see inflation making further downward progress, then the expectations for some easing from them before the end of the year, I think they can be met.